Fiscal cliff, Eurozone, and more coming up on Technically Speaking with Jim Wyckoff. Stay tuned. Jim, Happy New Year. How's it going?
Alex, good. How are you doing? And Happy New Year to everyone at Kitco and all the Kitco readers.
So, Jim, it looks like they did finally avert the fiscal cliff. How do you see that affecting gold in the time coming?
Well, Alex, initially on Wednesday, we saw a relief rally in the precious metals, a little bit of a risk-on attitude as the U.S. Congress and the Obama administration did come to at least a temporary agreement. Now the market is focusing on some other matters like Friday's jobs report, maybe a little bit more on Europe. But this fiscal cliff situation will probably resurface in a few weeks or a few months when they have other matters to deal with. But right now, from a technical perspective, the gold and silver markets are just kind of in a consolidative phase on a near-term basis, kind of chopping around. Prices have recovered from the recent lows. However, for February comics, gold prices are still in a 3-month-old downtrend, and the bears do have the slight near-term technical advantage. In March silver, we've seen a nice rebound. We saw some good price gains on Wednesday, a little corrective pullback on Thursday, but the bulls and bears are struggling for near-term control in the silver market too, and I give the slight edge to the bears still in silver.
Okay, Jim, you mentioned Europe. What kind of role will they be playing with gold moving forward?
Well, I suspect that now that the focus is not on the fiscal cliff anymore, that it will switch back to the European Union and its sovereign debt crisis. We just had some data out Thursday that said bank lending remains weak in the European Union, and that underscores the weak financial sector over there. So I suspect focus is going to be again more on the European Union. It's still my bias that the European Union overall situation, the European Union debt crisis, is an underlying bullish factor for gold and, to a lesser degree, silver on a safe haven status. And if we do get any flare-up in the European Union sovereign debt crisis, I think you'll see fresh safe haven demand for gold. Okay.
What kind of range do you see for gold and silver?
Well, right now, Alex, we see February gold trapped in a range. We got some overhead resistance, some psychological resistance at 1,700. We've got strong technical support at the recent low of 1,636. The direction in which gold breaks out of that range is very likely going to be the next trending move in that market. So I'm giving gold a Wyckoff's market rating of 4.5 as we speak. Again, tilting a little bit toward the bearish side. For March silver, we've got some stiff overhead resistance around the $32 level. And then we've got strong technical support at the recent low of 29.63.5. And again, the direction in which silver moves beyond those parameters is very likely going to be the next trending move in that market.
All right, Jim, thank you very much for joining us.
Yeah, take care and have a good weekend.
And thank you for watching this week's edition of Technically Speaking with Jim Wyckoff. If you have any questions or comments, please don't hesitate to send them to newsfeedback@kitco.com. Wishing you the best in this new year from all of us at Kitco. Cheers.